The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very good morning. I can tell you there is no meme going on here. This is the real Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are very real headlines. The Dow snaps an 8-day winning streak as inflation concerns linger with US producer prices due today before the all-important Wednesday CPI print. Well, talking of meme stocks, round two, a single post from Roaring Kitty, they call something else on Reddit, Roaring Kitty's social media account reignites the meme stock craze. GameStop short positions reportedly losing almost $1 billion in a single session.
Anglo-American shares close over 2% lower in London after the miner rejects an improved £34 billion offer from BHP, saying the sweetened bid still significantly undervalues its business. OpenAI launches a new artificial intelligence model while unveiling a desktop version of ChatGPT as it works to remain the market leader in generative AI. A lot of action in markets yesterday, inflation concerns, but also the focus on meme stocks as we talk about whether there is a viral cat again out there. Roaring Kitty, you heard in the headlines. So meme stocks on the move, but more importantly, I think the markets, if you look at the broader picture, roiled by concerns around inflation expectations. And this is relevant for a lot of economists looking ahead to what consumers may do down the track on those purchasing habits. So what we saw yesterday, the New York Federal Reserve's survey of inflation expectations showing near-term and long-term on both metrics, consumers expecting inflation to tick higher to the tune of 3.3% over the year, and on a 5-year basis up 2.8%. So I think the market worried that we are going to see that those price expectations still remaining elevated, potentially impacting consumer behavior. Next stop will be PPI, producer prices later on today, CPI on Wednesday as well, and Jay Powell talking later on today. So as a result, fairly dovish turn of events for the S&P 500, flat on the finish, slightly lower on the Dow, but higher on the Nasdaq, about 1/3% firmer. Some of those FANG stocks, if you take a look at the performance of those big name players, up about 1/3% in session for FANG names. In terms of treasury markets, a look across the board. You can see 4.48 were repurchased on the 10-year, not much movement. We're 4.85 at the short end. I want to take you to what we're seeing across on the Asian markets, picking up on that fairly mixed lead from Wall Street. Japanese stocks trade higher elsewhere. A fairly muted day playing out for Hong Kong stocks down 0.2%, Australia off 0.4%. Big focus on BHP and its attempts to lure Anglo-American, but those advances have been rejected so far. To US futures, and early on the picture stateside as we pick up on some of the big data points and what the market is now looking at. We will come back to the, you can see the futures as a result, Dow trading high, but red ink bookending that market on the S&P and the Nasdaq. But I want to come back to the meme names. As you can see, shares in GameStop surged as much as 119% on Monday, full closing the session up 74%. This after the social media user Roaring Kitty, widely seen as the account that sparked the meme stock craze back in 2021, posted on X for the first time since that volatile summer. Other meme stocks also gained. You can see AMC closing up almost 80%. Investors with short positions in GameStop reportedly lost around $840 million in the session alone and $1.2 billion this month so far. So, Steve, I think what was interesting to me was the talk of meme trader being back in, the meme stock craze taking off again. If you look at the time frame we're talking about, the market was actually trending up last time round. So does it forecast anything about the market, or is it just one trader getting more active again?
Who cares? I don't care. I think it's great. Are they doing anything illegal? No. If they're not doing anything illegal and they are encouraging share participation and people to get excited and animated about stocks, then they're doing our job for us, Karen. Good luck to them. If they're doing something illegal, chuck the keys away, throw them or put them in prison as well. If they're not doing anything illegal, fan-blooming-tastic. Let's get more people playing in the stock market.
I'll go down a different pathway about why it matters. So
it doesn't matter. It's a tiny stock and it doesn't matter.
It may signal something. So there's been no necessity to trade meme stocks for the last 12 plus months because there's been another name in the room which has been just as exciting, Nvidia.
But
for
Nvidia's
the retail,
a real company that makes real money.
Yes,
but
my
it has
point
a real
is,
trend that's going to affect our real lives.
My point is the performance on Nvidia has been pretty eye-watering. So if you're a retail trader, you got in, you had some of those huge increases. You didn't need to trade meme stocks.
Retail trader and meme stock are completely two different things.
No, it's not different. It's the same in the sense that you get an outsized return in a short space of time.
The meme stock trend was about manipulating a stock price legally or moving a stock price very aggressively.
That's one
We're
feature.
using a very small amount of stock.
The other feature was a huge return in a short period of time, which is why some have also been trading Bitcoin. So my point is that you've had such exciting returns in a very small number of stocks that retail traders could play and get those returns up front very quickly. So I think there's been less appetite for meme names in a way because there have been other exciting ways to trade the market, from Bitcoin to the likes of Nvidia.
But you're talking about real assets and real. This is a company.
I know I am.
If you're a short in this company, 29% of the stock's out on loan, and you've got to imagine most of them are short. They should be, as long as they're not having unbelievable margin calls that screw them over, they should be thanking people this morning because it's given them a better position to be short at. This is not a company that we're talking about it because it's interesting, but it's not a company that matters in our life. What matters is CPI, what matters is AI trade. Do you know this is a company, let me tell you, it's got a 9.3, you want to trade this? Knock yourself out. Do it. It's got a $9.3 billion market cap. How much do you reckon it made last year? And I'm grateful for John Authors for this one. How much do you think the net income is on this company? On a 9.3 billion market cap. It's 6.7 million net income. You want to buy this stock? Knock yourself out. Go for it. Good luck to you, mate.
I'm not necessarily interested in the trading around these names.
There's no comparison whatsoever with an Nvidia that you just mentioned.
Is there information in the trade that we're getting? Is it signaling something about the market? If you look at Nvidia over the past year, 212% return, year to date up 80+%. So I'm saying, have retail traders been distracted by some of the AI trades that, let's face it, they can see a pathway and they can see a reason for buying these names versus getting involved in meme names where they know that there have been lessons, there are question marks over the business of some of these big names from GameStop to AMC. I think that the market has seen that Nvidia might actually have some fundamentals there, retail traders as well, and they've been distracted by some of these other names.
I admire your bravery for putting together one of the greatest trends of the next few years with a stock that means nothing to the market.
I'm just saying, are we at the point now where some retail traders are finding the Nvidia trade, Bitcoin trade less exciting, which is why they're now moving?
The people who are buying Nvidia and holding Nvidia are not day traders buying a stock on the basis of a bloke leaning forward. Are you saying retail traders are not in Nvidia?
Is that your point? Are you saying retail traders are not buying Nvidia?
I didn't say that. I said the people who are buying Nvidia are not day traders who are buying stock based on a picture, and I hasten to add, an image of a man leaning forward in his chair. The people who are buying and holding, and it's on the screen. Oh my God, I've got to buy something. He's leaning forward on a chair. You know what? I tell you what, we've got an expert here. I'm going to do a load of reads in a moment, so keep those there. Robert Ulster joins us as well. Robert has been around a while as well. He's commented on this a long while ago. He's the CIO at Close Brothers Asset Management. He'll know. So, what are your thoughts? Good morning to you, sir. You didn't expect to step on the Cho Sedgwick landmine, but what are you thinking about this stock?
So, good morning. I agree with you, I'm afraid, that it's just a small part of the market, esoteric, interesting structurally in terms of the fact that it challenged some very big hedge funds at the time, but this is just a sideshow.
But if they're big hedge funds, they'll be going, wow, let's load up. We've just had the margin call. Let's load up. Let's back up the truck on this one because we now can sell this stock 76% higher.
I totally agree, but it's not the Mag 7. It is not a third of the S&P 500.
I'm not saying it's the same as those. I'm saying, what is it telling us about the retail trader? What do you think it is telling you about the retail trader?
It's telling us about the retail trader that they're risk on. And in this case, there's a following. They're interested in Bitcoin. They're interested in risk assets. They know that interest rates are coming down, that asset valuations are going up, and there's a following. And that's what they're interested in.
This is what I was trying to get to, that there is something in what we're
But
seeing.
no, you're
it may not
conflating
have
two completely different things,
ramification
Karen.
for the overall market, but it is telling us that the retail traders are doing something.
It's not telling the retail. The retail trader is something completely different from a day trader that is a meme trader. You have to differentiate between the two. A retail trader doesn't necessarily mean they're one who's just going to punt a load of money on a day trading position, take on a large margin position on the back of a bloke leaning forward in a chair. That is denigrating to the average retail trader who watches this show.
But I also don't think you can write off a whole bunch of traders. I mean, so we're saying Bitcoin's irrelevant?
No, we're not. But we are saying that it's just a small part of the market. It isn't actually.
But we know
connected
that,
to,
right? We know it's a small part of the
It's a
market.
tiny part of the retail
But we are
trading
seeing
market
movement.
as well,
So do we
Karen.
just completely disregard the movement we're seeing?
No, we don't. We report on it, and we're interested in its future and whether it's going to get taken out and who makes money or not. But the real issue about tech and AI and the Mag 7 carries on, and that's about the future, if you like, of the US tech, etc.
Yeah,
That's
but
really important.
To the point.
We can move on, Karen. We've made our points.
Well, full breakdown of Monday's meme stock moves and the heavy losses short sellers had to stomach. You can head online to CNBC.com.
Right, US inflation expectations ticked higher in April. The latest New York Fed survey showed consumers expect prices to rise at an annual rate of 3.3% over the next year, marking the highest reading since November. Investors will pass through comments from the Federal Reserve Chair Jerome Powell later today after getting the latest reading on producer price inflation ahead of Wednesday's all-important CPI print. Producer prices are forecast to rise by 0.3%, a slight uptick from the month before. Omega Family Office Chairman Leon Cooperman told CNBC the current policy rate is not too restrictive.
There's a lot of talk about the Fed being restrictive. I don't think they're being restrictive. Where's the evidence that the Fed is restrictive? We have the stock market at or near a high. We have tremendous speculation in individual stocks.
Guess what? Our next guest is on set. He says generally strong earnings this season have managed to keep market momentum going, all the more important given inflation appears to be more persistent. Robert, I wanted to try and find something to disagree with you, but I hear what you're saying. Robert Ulster, by the way, CEO of Close Brothers Asset Management, because we haven't had that leg of the stool from falling inflation or disinflation down to a level where the Fed can cut, which was one of the legs of the stool people wanted. Yeah. But is the earnings a bit of a mirage? Because I do love the call it low and beat. You know, as long as Karen and you and I have been talking about markets, the fact of the matter remains is call it low and beat by miraculously 60 to 70 to 80%. And we're getting that again.
That's exactly what we're getting in terms of the first quarter as well, with both earnings and sales, especially in the US beating, less so in Europe. So you're right, you could say, well, aren't the forecasts too low? On the other hand, earnings momentum, if you look at the forward earnings number, is moving up. And if you look at what's actually driving that, it is expanding profit margins. So there is actually sort of something real going on in terms of the economy there moving forward. But it is the Mag 7, coming back to the earlier conversation. Underlying earnings are down this quarter for the last 4 or 5 quarters. So the underlying sort of ex-Mag 7 part of the listed US market is sort of waning and struggling a bit.
So this is the point I wanted to make, was around NVIDIA. Do we actually know what the company looks like in 12 months' time? And how much confidence do you have that you have full visibility of its orders in 12 months?
So what we do know is that orders are maxed out, that there's actually supply constraints. So you know that there's huge demand out there for the NVIDIA GPU chip. What you don't know is what's that company going to look like in 3 or 5 years' time. But that's the exciting bit about the whole of what's happening in tech right now. It only really started back in October, November last year, and it's really the genesis of a new industry. It's back like it was 2007. I give you a smartphone, you wouldn't have known about the App Store and everything else that we utilise today.
So the next 12 months, then, its execution areas, the potential downside for NVIDIA, or some other wild card, whether it's energy supply or something else that comes into the mix. It's not necessary competition. After that, it is a competitive minefield, isn't it? We don't know what the pricing is going to be like if competitors come in. We don't know what sort of chips are going to be required, whether it's going to be AI training or inferencing, what that swing is going to be in terms of how much upfront on training versus inferencing. For me, those wild cards, it's not necessarily exciting on this valuation. It's concerning.
You're right. I mean, history is on your side. When you get this sort of demand, there is a supply response. And one of the chip companies is very likely at this moment, obviously developing an alternative competitive GPU to NVIDIA, whether it's China or one of the other US companies. But it's got a long way ahead, and we're talking 1, 2, 3 years here. So you just don't know.
Well, this is where it gets really exciting, whereas it was a clear split just now on the other chat, 2 against 1, and I don't like 2 against 1, but I feel now that I'm kind of like, I think neither of you have gone on firm sides of this, but I think you've raised a stunningly important point. You mentioned about the price earnings getting eye-watering, but we have a year's visibility. You pointed out that we don't have 2 to 3 years visibility. So then this becomes exciting, because if you look on a price earnings on 1 year, oh my goodness me, it's toppy. But if you look on the price earnings for 2 to 3 to 4 years as well, actually, if it can grow into that valuation, this is an amazing stock to own now. This is where it gets really, really tricky.
Exactly, but we're talking growth here, high 20s into 30%. There's not that many industries that have maintained that level of growth.
How long it can do that for before the moat is eroded by the rivals.
Exactly, it is exactly that. But this is a genuinely different tech move that we've seen before. So you could argue that this moat, as you put it, is going to last a lot longer than conventional industries in the past.
What we know is that the technology is coming through very quick and fast this time versus other cycles. But what we still don't know is how quickly the monetizing is coming through. For a handful of companies, it has, right? We've seen, Microsoft quickly build in a suite of products, and we've seen Alphabet try to monetize as well. Even Facebook is talking about how it can deliver some returns. But beyond that, OpenAI, new technology that came to market yesterday, but not necessarily attaching dollars and cents or pounds or euros or whatever you want to put to it. The returns are not quite there, despite being at the cutting edge of the technology at this stage. Isn't that a little bit worrying as we talk about the ability to keep on pouring more CapEx or OpEx into AI?
No, I actually don't think it is. And the reason for that is the demand is still not actually quantified or addressed. We don't know. I don't have, at the moment, generative AI on my laptop or on my smartphone. And that is going to be rolled out over the next 2 or 3 years across billions of units. So we're just in the really real foothills here of what's happening. And so coming back to growing into the valuation, that is what the market is assuming. And I think we could be sitting here in a year's time. There's going to come a point when the relative earnings growth will falter versus the rest of the market.
This is what I like. We're having this proper conversation about a proper company, rather than worrying about a company that's trading at 1,000 times earnings. We know that ain't going to grow into its valuation. Anyway, look, I tell you what I want to do on to it. I want to be on to the same kind of issue that we're having, but with a different thematic. And I'm going to read a bit from the Times, if I may. London Times this morning. I don't know if you had a chance to look at it, either of you, but it's just another leg of this story. This is, by the way, Eleanor Hayward's article and the health editor in the London Times. Weight loss jab cuts heart disease deaths by 20%. Semaglutide, also known as Ozempic or Wegovy, is set to transform treatments for cardiovascular disease, but a change in guidelines is needed to allow routine prescriptions. I'll just do the first paragraph. It's such an amazing story. Millions of middle-aged Britons, and obviously globally, should be routinely prescribed weight loss injections to cut their risk of heart attacks and strokes by a fifth, according to a trial set to revolutionise medical practice. Go and read the article. There'll be other copy out there as well. But the point is, and this has been raised with our guest from, I think it was Nova Seca the other day, and Karen and I were talking about, this isn't just a weight loss drug, potentially. If it has broader health benefits, we are talking about a series of drugs based on semaglutide, which could change medical care and those horrible horseman diseases, heart disease, all the things that go with it as well, like diabetes, heart disease, cancers, all these terrible diseases. We might be on the cusp of something very interesting here.
Agreed, but in this case, you can quantify it. You know what the demographics are, you know the cohorts in all the regions of the world, not just the UK, China. You can work through those numbers in a way that, coming back to the previous conversation, you can't about generative AI. So if I'm betting between the two, the answer is you bet on both. I'd still go with generative AI.
To go back where we started, Karen's going to make a brilliant point about companies that have had unbelievable hype an unbelievable valuation. This is just the most beautifully poetic show so far.
You might have me for tying these together to the weight loss drugs, but I think it was the same theme.
I think you're right.
It was the same theme. The consumer wanted to lead a healthier life.
What companies we're talking about.
Well, we're talking about Peloton and Beyond Meat. I think consumers wanted to be healthier, but now they feel like they found a shortcut to get there through some of the weight loss drugs. But if you look at the trade, 28% down year to date on Peloton, slightly less on Beyond Meat. Why are these names? Is there any recovery down the track, or has their time passed?
The cynic would say it's quite hard work running on a Peloton, and it's quite hard work in a way changing your diet, and yet the weight loss drugs such as Wegovy are very easy to take, and I think that's the real honest answer to what's going on here, and you get the benefits. And also Peloton to some extent was a COVID lockdown story which is unwinding.
To be fair, we called this at the time, and again, I eat alternative protein products. I do it for all kinds of reasons as well. I appreciate there's a lot of crap in some of them as well, but I do it for all kinds of ethical and environmental reasons as well. And the truth of the matter is, they were the wrong price on the stock market. No matter what I think of an underlying, I used to like Fitbit. Whatever I think of the underlying product, it was the wrong price. We've got to say goodbye.
Okay.
Is this your first time with us?
Second.
Second. It's a bit different, isn't it?
It's very
Will you
different.
come back for a third?
I definitely will come back for
good.
a third.
I'm surprised after our first outing.
Yeah, I know. We do enjoy ourselves, I have to say, and we get to do that thing that you do in the trading room, where we just kind of bark at each other and find out if we can get somewhere on the trading ideas. Robert, it's lovely to see you.
Thank you.
Thanks for joining us last night. Robert Alistair, who is the CEO at Close Brothers Asset Management. Well, it's all right, we're only a little bit late, Will. No go from Anglo. The miner rejects another takeover offer from BHP as the battle for the UK-listed firm heats up. Plus, OpenAI opens up the ante, unveiling the latest AI model as it looks to stretch the lead ahead of its competitors. And we'll get a pulse check on the health of the German financial system when the country's banking regulator, BaFin, released its latest report. Our exclusive interview with the group's president, Mark Branson, that's not Mark Bronson, Mark Branson, coming up at 12 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
UK-listed miner Anglo American has rejected a revised £34 billion takeover offer from rival BHP. Anglo said the bid still undervalues the company, adding that the structure was highly unattractive for shareholders. Lynn joins us with more now. Lynn, a huge focus on this one. Just to walk us through the latest, because there were all sorts of moves by BHP forcing Anglo to sell off certain parts of the business. So just walk us through where we're at.
Good morning to you, Karen. So many moving parts here, but as you said, this revised offer has been swiftly rejected. It has gone up in terms of value, but the structure is unchanged. And certainly when you look at Anglo's response, calling it highly unattractive, they're not so happy about the fact that under this buyout bid, they would be required to spin off their two listed South African entities in Emplat and Kumba as well. Now, in terms of what's next, really the ball is back in BHP's court. They have actually until next Wednesday under UK takeover law to put forward a binding offer. All this all goes away, with Reuters reporting that some of BHP's shareholders expecting that there could be another revised offer, perhaps a cash component to be added in terms of the bid in order to sweeten the deal here. So that is something, of course, to watch out for. The other major thing to watch out for is that Anglo is also under pressure from its shareholders to come up with a plan to show how it's going to bring back that value, because Anglo has been a significant underperformer compared to its peers. It's, of course, undergoing this strategic review that started mid last year, and the expectation is that today that it will be putting out some of the results coming out of that. The expectation here is that perhaps there could be some spin-offs or perhaps divestment here in terms of some of those underperforming assets that Anglo has, some talks in relation to, De Beers as well as Amplats. There's also this $9 billion fertilizer project that's also been hoovering up cash and perhaps could be on the table. And then there's the wider South African context here, because we are about 2 weeks away from a general election there. The concerns for the governing government in terms of potential capital outflow going forward, and also what that means in terms of the country's reputation in terms of mining investment. And then, of course, the other thing to note is in Florida at the moment, we've got the CEO, Mike Henry, and his Anglo counterpart meeting in Florida. Could there be a meeting on the sidelines about this?
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.